Well, this is one of those days where we have a huge amount to go through this morning, but I'm going to really encourage you to stay to the very bitter end because so much of it is critical in terms of understanding where markets are right now, which is very confusing. Maybe one of the most interesting times in history in terms of the markets working in various different ways, the tariffs obviously impacting, but I believe impacting at a level which is kind of maybe you would think of like global warming, like a lot of scary headlines and not actually going to have that much impact on real life. So, but the numbers do show where this fear is turning up here and there, and so we'll be going through that. But anyway, we'll start out by saying that markets are mixed right now. They've been up, they've been down, and all around, even in this early going. Tesla has been up, Tesla has been down. So anyway, but there's a lot of reasons for people to be a little confused this morning. Let's start with this. Mario Nawfal's reporting. Tesla insider goes all in as Wall Street admits betting against Elon was a mistake. Tesla board member 𝐤𝐸𝐽 just made the first insider purchase in nearly 5 years, dropping over 1 million on company stock in a massive vote of confidence for Elon's vision. The timing couldn't be more perfect as banks found buyers for the 1.2 billion in X debt that they've been stuck holding since 2022, debt that transformed from financial suicide to hot commodity after Trump's win and Elon's genius merger of X with his AI startup. Even the ivory tower admits it. For those who say never bet against Elon, they seem to be right this time, is the quote. The Elon playbook remains undefeated. Number one, make a bold move. Two, get ridiculed by the experts. Number three, prove everyone wrong. And then four, repeat. That source of that is the Financial Times. Teslarati comes out this morning with regard to the China numbers. Over the week, the electric vehicle makers' registration saw an impressive 51% week-over-week rise, suggesting that domestic vehicle deliveries are on the rise once more. Of course, the only place you're going to find this is Teslarati. There was not a single headline about this anywhere after weeks and weeks of headlines about China numbers being down. In the week ending April 27, Tesla China saw 10,300 new vehicle registrations. This represents a notable rise from the company's registration numbers. For context, Tesla China saw 3,600 registrations last week, etc. You understand that we're now getting back into where they're not exporting as much, they're selling to the domestic market. It says, considering that April is the first month of the second quarter, expectations were high that Tesla China was allocating Giga Shanghai's output for vehicle exports. 10,300 registrations ending April 27. It appears the company's domestic deliveries are picking up once more. Now, what we want to see starting next week is like 16, 18,000 a week. We'll see what happens. The Model 3, for one, appeared to have seen 3,200 registrations. It's a 14% increase. The Model Y, on the other hand, saw 7,100 registrations. That was a 77.5% increase. Anyway, as mentioned, though, you'd think that at least one headline someplace other than Teslarati. Sawyer Merritt says, news, Tesla has revealed that in quarter one, 2025, they recorded one crash for every 7.44 million miles driven in which drivers were using autopilot technology of any kind. For drivers who were not using any kind of autopilot technology, Tesla recorded one crash for every 1.51 million miles. That would be about a pretty close to four times. So you got a four times less chance of being in an accident if you're using your autopilot. By comparison, the regular old folks out there get in an accident every 702,000 miles. So if you're driving any kind of autopilot on Tesla, you have a 10 times less chance of being involved in an accident, according to Tesla statistics. This is from Bastian Braun 121. He says, breaking, Morgan Stanley forecasts a 5 trillion revenue boom for humanoid robots by 2050. I'm sorry. Morgan Stanley. Tesla is leading the charge with optimists. How big will Tesla's piece of the massive market be? 5 trillion by 2050. I mean, come on. Holy mackerel. This is Randy Kirk. Please hit like, please hit subscribe, please hit notify, all that stuff. What do we got coming today? Normal Tuesday. Nicholas Gibbs, who you guys are just loving Nicholas Gibbs. The numbers every week go up on him. More and more fans for Nicholas. He'll be on 5:15, 5:20, something like that. And then more Brian White China results. He'll be on at 7:45. Looking forward to seeing you guys later today. Join Patreon, of course. That'll be lovely. Yeah, okay. A lot of economic news today. Okay, let's dig in. I put this one right at the top of the list, although again, you're not going to see this hardly. You're going to have to dig deep, as I do, of course, every day for you. You have to dig really, really deep to find this one. But Texas wants to go nuclear and fast. Move over oil. Texas is eyeing a new title, America's nuclear king. All right, now what you have to know about Texas is, it says move over oil, but the reality is Texas, last time I checked, was leading in solar, maybe leading in wind, in addition to oil, and now they're going to start doing nuclear. So with AI data centers and heavy industry guzzling more electricity than ever, Governor Greg Abbott is going all in on advanced nuclear power. I want you to listen to this, specifically small modular reactors. This is what I've been talking about for 2 years or longer. Brian Wong and I will be, I've been bugging Brian. We need to do a specific one on nukes. Maybe this will generate the kind of information that where we can go in and dig back in on mini nukes. The plan, a $2 billion state fund, a brand new nuclear authority, and a red carpet for private firms. Texas also dominates on fossil fuels and wind. Yeah, I think it's also solar. I think they're number one. Anyway, I could be wrong. Anyway, that was all from Reuters. This is from the real E.J. Antoni. He's got a couple of articles for us this morning. Excellent articles. Again, stuff you're not going to read elsewhere. Despite lackluster tax revenue, spending reductions have allowed Treasury to revise down its estimated borrowing needs for Q2 by $53 billion. What the headlines are all talking about is that the headline number on this was a big revision up. But it turns out there was accounting problems in that. There was a lot of, it says, when you take into consideration, according to the real E.J. Antoni, says, when you take those accounting changes into account, it was a $53 billion reduction in the amount that they'll have to borrow. Reserve repurchases are rising as per the usual end of the month routine, but and then in addition to that, reserve repurchases are rising as per the normal at the end of the month routine, but this spike is far less than the prior months, meaning there's a chance that the facility will drain out in the first week or two of May, and that will likely prompt the Fed to end quantitative tightening and switch back to quantitative easing. This is something that's being called for by so many people. We got to get that money supply moving back up again. Advanced international trade in goods. The international trade deficit was $162 billion in March. That was up from up by $14.1 billion from $147 billion last month. Exports of goods for March were $180 billion, which was actually up also $2.2 billion more than February. Anyway, so that meant the overall trade deficit went up, but that was expected. Advanced wholesale inventories. Wholesale inventories for March, adjusted for seasonal variations and trading day differences, but not for price changes, were estimated at end-of-month levels, $908 billion, up 0.5%. On the other hand, advanced retail inventories, adjusted for all those same things, were down by 0.1%. So inventories, which were a lot of people were thinking would be up, including me, because of this pull forward that everybody's been talking about, but it didn't really impact. I mean, wholesale inventories were impacted a little bit, but retail inventories were actually down. That would suggest consumers are buying all that stuff. So maybe people are, again, pulling forward. Of course, auto impacts us a huge amount, and maybe a lot of people buying automobiles in March in particular. might be impacting that. Consumer confidence. Everybody's waiting for the consumer confidence numbers to come out. Well, they came in as expected. Consumer expectations for the future are at a 13-year low. The Conference Board Consumer Confidence Index fell by 7.9 points in April to 86. With 1985 representing 100. The present situation index based on consumers' assessment of current business and labor market conditions decreased only 0.9 points to 133.5. But the expectations index based on consumers' short-term outlook for income, business, and labor dropped 12.5%. Points to 54.4, the lowest level since October 2011, and below the threshold of 80 that usually signals a recession. The cutoff date for preliminary results was April 21. Consumer confidence declined for a fifth consecutive month in April, falling to levels not seen since COVID. The Conference Board said the decline was largely driven by consumer expectations. The three expectation components, business conditions, employment prospects, and future incomes, all deteriorated sharply. Notably, the share of consumers expecting fewer jobs in the next few months was nearly as high in April as in April of 2009. So people are looking at this tariff thing. They're afraid. They're scared. The newspapers are making it sound like it's the next Armageddon or something. I don't know what. April's fall in confidence was broad-based across all age groups and most income groups. The decline was sharpest among consumers between 35 and 55 and consumers in households earning more than $125,000 a year. The decline in confidence was shared among all political affiliations, although they don't give the percentages. I bet you there's a difference in those percentages. Current situation was basically unchanged. This is what's really important. The current situation was unchanged. This is all about fear based on future tariffs. JOLTS, job openings. The number of job openings was little changed at 7.2 million in March, but was down by about 901,000 year over year. So like only from 7.3 to 7.2. The job openings rate at 4.3 changed little. The number of job openings decreased in federal government, down 36,000. There you go. That's what we're looking for. Hires in March, the number and rate of hires were unchanged at 5.4 million and 3.4%. The number of hires was little changed in all industries in March. Okay. Separations, total separations, including quits, layoffs, and discharges, and other separations. Quits are generally voluntary separations. Layoffs and the number and rate of total separations in March were little changed at 5.1 million and 3.2%. Total separations increased in state and local government, up 28,000, but decreased in federal government, down 8,000, which is as it should be. In March, the number of quits was unchanged at 3.3 million. The quits rate was little changed. So you've got no real changes in the JOLTS. The JOLTS looking very, very, so as we're heading into Employment Friday, nothing to write home about so far. This is from the real �伊𝐥 Antoni again. He says he's reporting on paychecks, which I don't normally, I think we reported on last month. Paycheck small business job index remains stuck around break even in April, a holding pattern that has existed since last April when the index fell to 100.12. Don't expect small business to contribute much to Friday's job numbers, but big business may be doing just fine, he says. Then we've got Stock Talk Weekly. I don't think I've ever used them as a source before, but it says India is prepared to offer United States most favored nation clause to sweeten the trade talks. India wants to be the replacement supplier to the United States in areas vacated by China. Well, we kind of knew that, but it's getting closer and closer, and maybe the deal being in place. India is willing to make concessions on up to 90% of tariff hardlines in order to secure the deal. Wall Street Journal. British Petroleum said Tuesday it's aiming to boost its production of oil and gas in the United States by more than 50% by the end of the decade. The move comes as BP slashes green spending and pivots back to fossil fuels among pressure from their investors. Those include activist hedge fund Elliott Investment Management, which now has a 5% interest in the company. We're pretty tightly aligned with the president, meaning the president of the United States. Chief Executive Murray 𝐂𝐦𝐚𝐲 said in an interview, adding that BP plans to raise U.S. production from 650,000 barrels a day to more than 1 million by 2030. It's both in oil and gas onshore and oil and gas in the Gulf of America, he said, using Trump's preferred name for what used to be the Gulf of Mexico. Fortune magazine. Now, this will be interesting, especially as we're talking to Nicholas Gibbs tonight, because Nicholas Gibbs says housing costs are coming down. Well, Zillow, for the first time that I've seen, is now predicting home prices will fall 1.9% this year. It previously anticipated a 0.6% increase, and that was until April. That expectation changed in April, in other words. The combination of rising available listings and elevated mortgage rates is signaling potential price drops by year's end, Zillow researchers wrote. With increased supply, buyers are granting more options and more time to decide, while sellers are cutting prices at record levels to attract bids. Now, my expectation for this year is that prices would still go up 3%, which would be way less than they've been going up, but still going up. I continue to believe that because I think mortgage rates are going to come down, and this is going to just create a buying frenzy. And I've seen this play before, and there isn't that much inventory out there, even though Zillow's saying, well, but these people are all probably 12 that are making this report are, when I say 12, I really mean 35, and they've never seen an actual situation where there's lots of inventory. The inventory that's still out there right now is still 20 years ago, we would have said, these are historic lows. 20 years ago, 15 years ago. What that means is that after years of housing market where not a lot of people were buying or selling, more sellers are coming back than buyers. It's tipping the scales in favor of the buyers, where home prices dip and available homes for sale linger longer. The backdrop of economic uncertainty stoked by the president's tariff agenda, which previously fueled a sell-off in stock and bond markets, is only compounding things. Buyers might pull back more, further forcing sellers' hands. One thing we have to take into consideration is there's now what would you say? I'd have to look back. When did interest rates start going up? That would have been like 3 years ago. So now you've got 3 years of people who have purchased homes at 7%, 8%. So some of those might be in trouble. That could increase a little, could stimulate a little more sales. Would-be buyers and sellers retreated in the last couple of years after home prices soared throughout the pandemic and mortgage rates skyrocketed not long after. Some couldn't afford to buy while others refused to sell because they didn't want to lose so much buying power, their lower mortgage rate. We've been talking about that for years now. Home sales are depressed because of that push and pull, although it appears buyers are still holding out and sellers are sick of waiting. Yeah, I don't think those 2 and 3% folks are going to sell. I mean, sure, a few of them will. Some of them have died and their family are forced to sell. Okay, let's go ahead and see where things are now. Okay, so we're kind of at the maximum negative for the day. So Tesla's down 1.41%, which is as much. It was down a little bit more earlier, and now it's starting to curl back up again. We'll see what happens. We'll look at it one more time in a minute before we close out today. We've got the S&P down 0.15%, still at 5520, right on the nose of the correction. 5520 is what I've been saying. It's exactly 10% down from its all-time high. NASDAQ is down 0.14%, and the Dow Jones is actually up 0.08%. All of this everything's been playing around the zero mark. All of those reports that I just gave you, and yet we're not moving the market at all, which tells you that none of them are off compared to what people were expecting. People are really concentrating on the earnings reports that are coming out after the bell. I'm expecting those earnings reports to be fine. Sure, the guidance might be a little this or that, although Coca-Cola's guidance today said, everything's fine. somebody did come out and General Motors said that their guidance was they had some their numbers were not great and their guidance was questionable because of tariffs, which makes sense. I mean, for General Motors, Tesla down a little more now, 2.06. Okay, Magnificent Seven mixed, mostly down. Nvidia basically flat. Most everybody on Magnificent Seven is pretty flat, flatter than Tesla this morning. And then you've got the Cathie Woods, which except for TDOC and Block, those are two are up. Everything else is down. Okay, let's go ahead and look at the bonds. Yeah, I'm so sad. The bonds are up 1.9 base. I'm sorry. Sometimes the old numbers are still there. See, now I'm happy, happy, sad, sad, happy. Anyway, 10-year down 3.7 basis points. Go. We're now to 4.179. This is fantastic. I think we're going to the threes shortly. This is what should be happening this morning because of those numbers that came in terms of the lower need for borrowing and that this makes total sense. So the 2 years also down 2.5 and the 2-month is down 0.5 basis points this morning. So good news. We'll see if we can get into the threes here in the next few days. Let's go ahead and look at oil. Oil is down this morning. Trade war concerns dampened demand outlook. It might be, though, that British Petroleum just said they're going to drill, baby, drill. Anyway, down $1.24. We're getting close to going into the 50s on oil, $60.81. Brent at 64.48. Natural gas up a little, but remember, it's beat down at $3.35. It is up this morning, though, 0.21. Gold is falling $28 this morning, $33.19. Silver, though, the opposite, up 0.52%, $33.17. Strong number for silver. Copper down a bit. It's been shooting for that $5 level again, but down a little this morning, 0.29 at $4.82. You got the dollar on track, it says, for the biggest 2-month fall in more than 2 decades. But it's like this much. I mean, it's really, anyway, it's mixed this morning. However, Bitcoin up. Well, okay, this is called unchanged for Bitcoin, $66, 94, 884, 878, changing, of course, every second. But that's a good, strong number for Bitcoin. Okay, so yeah, we also have Amazon saying that they're going to show on Amazon how much the tariff is impacting each product that's being sold on Amazon. And the White House was not happy with that at all. I think the tariffs, quite frankly, it takes 6 weeks minimum for something to get to retail from the time it leaves China. So we haven't even, the tariffs, April 2nd was big tariff day. There was some tariff commentary and stuff before that. We could barely be seeing products coming into the United States right now that are impacted by the tariffs. And yeah, all right. So we'll see what happens. It'll make some headlines, and Amazon will get some stuff out of that. But the White House definitely not happy with that decision. Okay, and let's go ahead and look back one more time as we remind you once again about Nicholas Gibbs coming up at 5:15, 5:20, and then Brian White at 7:45. Last night, what would I recommend? Oh, yes, you want to definitely go back. And Larry and I had a great debate last night. I'll put that card up for you right here, of course. And yeah, we debated everything. I mean, we went down and we actually I try to keep the conversations under an hour, but we went over an hour. Why? Because we were having such interesting conversations about so many different issues. As I noted earlier, things are kind of moving back up again. All 3 indices are now back in the green. Tesla is down 1.24. So yeah, I think the trend right now, it looks to me like we probably end today in the green again, because I think everybody anticipates that the numbers from Apple and I think it's Apple and Alphabet today. No, it's not Google. Apple and I forget. But But anyway, 2 of the Mag 7 will be out after hours today. All right, so that's all I got for you today. As always, it's been great talking to you.